I'm here with Alex Kyriadikidis, managing partner of Deloitte, based out of London. Welcome.
Thank you. It's good to be here.
I have followed Deloitte a little bit over the years, as from a general sense of a very large consultancy group, but I'm not really familiar with specifically with what you do in the hospitality travel sector. Could you fill us in a little bit, please, Alex?
I'll be delighted. Out of Deloitte's 110,000 people around the world, we have a global network of tourism, hospitality, and leisure professionals within Deloitte, specializing in this industry for each of our four primary service lines, which are accounting and audit, taxation, consultancy, as you've said, and corporate finance. So in most major geographies around the world, we have a team of people within those service lines that live and breathe the tourism, hospitality, and leisure industry. Our market share around the world is quite substantial in this industry. It's the leading market share among the big four professional services firms. For example, in certain sectors, such as the gaming sector, our market share is 85%. In hospitality, it's 50%, and so on and so forth. So on a global basis, we are the largest provider of professional services to the tourism, hospitality, and leisure industry.
And when you mentioned one of the top four, who are a couple of the others?
I meant among the big four accounting firms, which are PricewaterhouseCoopers, KPMG, and Ernst & Young. Deloitte in this industry is the largest provider of services to the tourism, hospitality, and leisure industry.
And I recently heard from some associates and friends at London's IBLF, International Business Leadership Forum, a Prince of Wales organization, that you hired away a couple of their people into your corporate social responsibility, CSR division, and that's growing. Can you tell me a little bit about that?
Yeah, corporate social responsibility, sustainability, and related major considerations for our industry are huge areas of interest for our clients around the world, and indeed for our own people, because having 110,000 people, all of whom are consumers of tourism, hospitality, and leisure, actually gives us a tremendous sense of what the consumer does today and what their buying patterns and the thinking is in relation to this industry. So corporate social responsibility and the various strands within that, certainly the sustainability agenda, are very high priorities for us to develop leading-edge thinking in relation to those key considerations for the future of this industry.
The WTTC's figure this year is that for the next decade, the growth in travel and tourism expected to be somewhere in the neighborhood of 4.5%. For the novice economists out there, that's me, how does that translate? 4.5% growth doesn't mean much to me. How does that translate into numbers we can relate to?
Yeah, just to put it in context, I think our own projections are that last year there were 1.6 billion air travelers, and I'm just now picking one sector of travel, the airline industry. We project that because of the growth of the low-cost carriers, because of the impact of emerging markets, particularly China and India, in terms of demand for airline travel, that is going to grow to 2.3 billion passengers just over the next 5 years. Now, that's just airline sector. So in the airline sector, we are predicting considerably greater growth than 4.5%. But then when we add all the other forms of travel for tourism, the average out is about 4.5% or so. Now, to get a sense of the dynamics of that, it is important, I think, to understand what happens every time a single traveler lands anywhere, and what we call the economic multiplier that benefits from that traveler. So while, for example, a traveler may spend $100 to stay at a mid-market hotel in Paris, that traveler will spend typically a multiplier effect for those dollars in all the other services that he or she will procure while they're staying at the hotel. So the impact on the local community is typically sometimes up to 2.5 times the absolute spend of a particular traveler in a destination. So the economic effect of travel and tourism is very, very powerful.
And still, I'm not sure I have a sense of what 4.5% of $4 or $5 trillion a year, 11% of global GNP translates to this growth, this managing growth topic of this. So when we talk about corporate returns, people talk about 20%, 30%. We're here talking about annual growth of an industry at 4.5. How do the two?
Yeah, I think the growth are in numbers of people traveling globally in travel and tourism. And of course, what it doesn't do is look at the spend and the impact of that spend on the profitability of the industry. The industry today is revving on all cylinders, whether you look at the airline industry, which has come back from the doldrums, whether you look at the hospitality industry, which has surpassed the pre-September 11 occupancy and rate levels. So it has really come back extremely healthily. So that when you have a global industry where load factors in the airlines are already very, very healthy, a hospitality industry where the occupancies are north of 70% in most major destination cities, then literally for every $10 worth of revenue, a substantial amount of that 10 drops straight down to the bottom line. Put it another way, if pick a sector, the hotel industry, if they just closed the doors today and said, okay, we're not going to open any more hotels, they are guaranteed to grow profits by 20 to 25% for the next 5 years, just based on demand for hotel product over that period, and the fact that the revenues that come from that demand drop largely to the bottom line of the industry. So,
lately, there's appears to be an acceleration of the private equity money funds acquiring hotel assets, basically acquiring hotels or hotel groups. Of course, Starwood has always been private equity. We all know about Accor or Fairmont Hotels as a brand, but I don't think many people would know that Colony and Kingdom equity funds, the primary shareholders. How is that something that is a cycle? They're in now, they're going to get out, and something also will happen, or what kind of a situation are we in?
You know, it's very interesting because we've seen this industry become the darling of investors around the world. And why it's become a darling of investors is, if you look at some other industries over the years, you can all remember the dot-com bubble bursting and a whole raft of other industries suffering. It's actually demonstrated, this industry has demonstrated that despite big shocks to the system, like September 11, like SARS, like Iraq, it is robust, it is growing, and no one has fallen by the wayside. At the same time, if you put the kind of fundamentals that I spoke about earlier, continued growth in airline travel over the next 5 years, it paints a picture of an industry that sort of stands and says this is a very healthy sector to be in financially. Add to it the dimension of real estate, and appreciating that certainly for the hotel industry, a lot of that real estate is in prime locations in major cities, which of itself has been enjoying a tremendous boom over recent years. Then you have the hallmarks of a very attractive industry for investment, both by private investors, but also private equity, investment banking, and pension funds. And so what we've seen increasingly recently is what we call public to private switches by the private equity industry. Coming in, buying public companies, taking them private, giving them a boost to grow over a 4 or 5 year period, and then flipping them out again on the next investment cycle. If your question is, are we going to see an end-to-end investment cycle? Are we going to see the industry go bust? Absolutely not. I think what you're going to see is an industry really that will go from strength to strength. There will be continued shocks. Terrorism is here to stay. There will be shocks to the system. But what's interesting is if you look at the analysis of what happens when you have an event of this nature, and we, as you know, track the performance of this industry, travel and hotels globally through hotelbenchmark.com, we are seeing that the recovery period post a dramatic event is shorter than ever before. So if you go back to September 11, it took virtually 2 years for the industry to come back, both airlines and hotels, because one other interesting